Welcome on board. We're going to discuss the U.S. retail sales, which will be out in about 10 minutes, and me and my colleague Max are going to cover it for you. At the current moment, the forecast stands at 0.2%, and the prior figure stood at 0.4% respectively. The amount of money taken in by retailers in December is likely to be on the soft side again, winding down a disappointing year. It's not just because Americans are uber cautious shoppers these days, though. Falling prices, especially for gasoline, have had a lot to do with that, definitely. In the summer, retail sales are expected to fall slightly, mainly because of fewer auto purchases. The report comes out in about 10 minutes, as I already mentioned. More to the point, retail sales rose a meager 1.4% in the 12 months to November 2015. Government figures show even if gas is excluded, sales increased at a lackluster 3.7% pace during that same period, far less than the typical annual clip of 5% or more in good times. Many economists had expected stronger sales by now, particularly after a huge surge in hiring over the past 2 years that's put millions to work and given them more money to spend. But the habits of Americans have changed in the wake of the Great Recession. They've increased their savings, for one thing, definitely, and they continue to hunt for bargains when they spend on electronics, clothes, home furnishings, and the like. Sustained discipline on the part of consumers has forced retailers to cut prices or rely on frequent sales to lure buyers. That's one reason why sales in dollar terms are weak, even though the number of products sold is increasing. Traditional brick and mortar stores are under even more pressure to keep prices low because of the increasing shift to online sites such as Amazon.com and Overstock.com. Also pushing retail prices lower are lower costs of raw materials. Along with oil, the costs of most commodities have tumbled over the past year, obviously. Declining inflation means companies have a bit more leeway to cut prices. Falling prices or deflation is widespread among consumer goods. In the 12 months ended in November, for example, the cost of used cars fell 0.6%, home furnishings fell 1.4%, sporting goods fell 1.4%, also clothes fell 1.5%, appliances dropped 4.2%, toys tumbled 5.2%, computers skidded 7%, and televisions plunged 12%. On the flip side, the cost of medical care and shelter, the two largest household expenses, are both rising much faster than the overall rate of inflation. Rents are rising at the fastest pace in 2008, for instance. Let's have a quick look on what do top 10 economists surveyed on the matter think on this particular data release. And according to their views, we have the Bloomberg survey summary. Here you can see that the median estimate stands at 0.2%, average estimate stands at 0.19%, high estimate stands at 0.7%, and low estimate stands at minus 0.4%, and the number of estimates this time has reached 69. And I guess last but not least, the community member poll, their sentiment on the pair US dollar Japanese yen, and as you can see, the traders are slightly to the bearish side, 53.13 versus 46.87, and we have a couple of comments by our community members which are bullish. For example, Sonia, our most loyal, definitely one of the most loyal community members, she says that despite the pair is in the downtrend, she expects better data than forecast, and dollars was the strongest since July 2015. The Fed tax raises and market mess are directly liable, thus she is bullish on the greenback. But I guess it's time to wrap up the fundamentals and get back to technicals with Max.
Thank you very much, Polina. Hello, everyone. So before I jump in with the technical part, let me just remind you that besides the retail sales data today from the US, we are also going to have a major release on the Producer Price Index and the New York Empire State Manufacturing Index survey all together at the same time. So it means that the market reaction is going to cover all the three data releases, which is going to be probably quite significant. As Paulina has already mentioned, the expectation for headline retail, for the core retail sales, is for an increase of 0.2% in December, which is down from 0.4% in November, while the headline retail sales, by the way, are expected to drop by 0.1% in December after some increase in November. Moreover, such financial institutions as Morgan Stanley and JP Morgan Asset Management, they expect a decline for the headline reading of 0.8 and 0.5 percentage points respectively. But we will see that in some 4 minutes from now. Speaking about the technical part, today we have the cable for the discussion. This currency pair continues to have very positive sentiment on the sterling against the US dollar. And by the way, the US dollar is also being sold in the majority of all the cases right now, 53.26%. And that's why we also have, it is one more reason why we have the negative surprise trading strategy today. Moreover, pending orders to acquire the sterling against the greenback are also very bullish indeed right now, more than 60%. And it also means that the market participants expect this particular currency pair to increase in value in the nearest future. Speaking about the market sentiment provided by other market participants, we see that Wanda Daily Ethics and the Saxa Group traders, they all are also bullish on the sterling against the US dollar. Speaking about the trading strategy and the current market situation, as you can see, the pair is at the moment trading at 1.4343 level, which is just already 7 pips below the first take profit level, which was assumed a bit earlier because in the last couple of minutes the pair has actually risen in value. But since we have the negative surprise trading strategy, of course, in case we have a negative data from the US, we will possibly see the pair growing in value, which will mean that the US dollar is going to depreciate. Speaking about the possible market reactions, as you can see from this particular table, for the cable, the average reaction in the past 5 months for the retail sales data release was 25 pips. And therefore, we initially placed the first take profit at 1.4350 level, which is followed by the second take profit at 1.4365, which is, by the way, strengthened by the first daily resistance level today. And on the other hand, in case we have a positive data from the either retail sales or PPI or Empire State Manufacturing Index, we of course can see the US dollar appreciating as well in case we have a really positive surprise, quite an unexpected one. Then we can observe the cable going down, most probably in the area of 1.4320, which is strengthened by the weekly S2 support this week, which is quite a major one for this currency pair. And at last but not least, I will just cover the technical indicators for the cable, which, by the way, are supporting the bearish scenario for the moment, as they are sending the sell signals on aggregate. But of course, it will all depend on the data. Hopefully, we will see the numbers in the chat section in some 12 to 15 seconds from now, and we will see the first initial reaction from the cable and possibly the other currency pairs. But let's just wait for the incoming data. Actually, the pair attempts to go higher right now, as you can see, not that sharply higher, but still, let's just wait for the numbers to see. The US retail sales actually declined by 0.1% on the headline basis, in line with expectations, while core retail sales also declined by 0.1% against the expectation for a 0.1% decrease. Speaking about the PPI, it is also published in line with expectations. It is a decline of 0.2 percentage points in December, while the Empire State Manufacturing Index, as you can see, it is published much worse than expected. It dropped by almost a drop of almost 20 points, which is a very negative, I guess. It is the worst reading in some half a year. Right now, which is a very negative surprise for the manufacturing sector, manufacturing industry in the New York state. And by the way, the prior reading for the Empire was revised down to minus 6.21. And initially, of course, we have seen some bullish reaction from the cable. This currency pair actually increased in the last minute, in the first minute after the data, by some 14 pips to the upside. And in case we check, let's see the reaction for the euro-dollar currency pair, also the 1 minute chart. So here we also see some reaction, which amounted to 23 pips to the upside, so a bit more positive reaction from the euro right here. Okay, I guess that's for the technical part. That will be all from my side today. Thank you very much for listening. I wish you all a great weekend ahead. See you all on Monday, and back to you, Polina.
Thank you, guys. Thank you, Max. And that's pretty much a wrap on the news release today. We can still see the reaction on Max's screen, euro-dollar 1 minute chart, and hope you had a lot of green tips out there, definitely. Yeah, we still have a couple of webinars for today left, but community members and Tanashi is very welcome to continue with his. Yeah, guys, that's it for today. Take care and have a great weekend ahead. Bye.